Hello and welcome to this video. Today I'm going to be doing a stock analysis on Goodyear, the tire company. Now the reason I'm doing this today is it is Liberation Day today, which is why it looks like this up here where we see SP, Nasdaq and Dow Jones has taken huge beatings. And the reason I want to highlight the Goodyear tire is because one thing that has been left out of Donald Trump's plans are tires. A lot of cars and car parts are part of his new tariff strategy, but not tires, which is why it is increasing today. As you can see up here, almost 12%, 11.7%. Now post-market is a bit down, but we'll take a look at that by the end of this to see if it moves even further. The market just closed. Now, it's quite interesting actually. If we look at the stock all the way back to September 23, we can see it's quite a volatile stock. It was trading up in $13, and as you can see, it trades quite up and down, and we see also down here in the RSI, you can see it's quite volatile. Up and down, up and down. We don't see any really far trading patterns where it trades in the upper than the lower. We see somewhere it's up and down all the time. We do see some where it lays right on the edge, as you see right here, where it's trading sideways. That's an okay pattern when it's trading sideways. But then we see falls, pitfalls, hilltops, pitfalls, hilltops all the time. So it's quite volatile, which is something I really don't like. Now, this company is actually it's quite big. It's known for it has one of those large blimps, and it is one of the most well-known tire companies in the entire world. I think it's on par with Pirelli and stuff like that. But I don't really like the company in itself because they don't really make any good money. I'm gonna show you that now. As you can see here, they beat their earnings in the last 4 quarters. This was up by 887%, which is quite decent. But and they don't pay out dividends. But just look at their annuals. Minus a billion. They earned 17 billion, but only earned 764 million. So you can see they don't rake in any money at all, barely compared to how much their revenue is, because their margins are so goddamn small. It's insane. I thought that there was going to be good margins in a niche like tires, but they're really, really poor. Now, I think maybe in the short term this might be decent, but then I figured if less cars are being sold, chances are less wheels are being sold. Of course, the same amount of cars will still be on the road, but often when you get a new car, there are going to be new tires on it, which means if there are less new cars sold, the new tires sold from Goodyear itself is also going to be less. So I think chances are they are also gonna be being hit by this, as the new tariffs mainly focus on cars and car parts, all the way up to 25%, mostly from Europe and China, as far as I could read today. We will of course see if it changes soon. Now performance, as you can see here, is a very old company. It goes back to 68. If you go back to 2010, the last 15 years, as you can see, it really isn't that great of a performer. Some years, like 21, it increased 100%, which is crazy, and 13, 70%, and 23, 40%. But besides that, it's in the lower 20 and below, and we see a lot of minuses, a lot of minus years, which of course aren't great. But yeah, the overall performance just isn't really that crazy. I would say if they paid out great dividends, it would be a perfectly fine stock to keep if they paid out good dividends, but they don't pay any dividends out at all. So I don't really see the case for having this at the moment. Now, if we take a look at some technicals here, as you can see for the day, it is a strong buy. We have 14 by 1 neutral. For the month, however, it is a sell. And that is because we see over the past month here, as you can see, it is slowly going down. And we also came in the start of March, as you can see from this huge pitfall here, where we even have some gaps in the stocks here, which of course isn't good for the technicals, but we're trading all the way down in 8.3. And then of course you see it spike, but then it falls quite a lot. We see a lot more red than green candles here, and just the overall momentum, just as you can see down here also, it's really not that great. So this one day doesn't make up for it. Of course, we see this yellow line here, which is a golden cross for the day because it simply increased so much. And of course, it was getting close, and then the day itself just pushed it over the edge. Maybe this golden cross will make sure that the performance of this stock is going to increase. We don't know. Let's see if it's changed in the aftermarket. No, still minus 20% to 0.20%. So yeah, but day is strong buy. What about the week? Yes, it's a buy for the week. So we do see some betterment as we see for the week. It is starting to increase, but for the month it is still a sell. So let's wait and see how it happens. Now, of course, you have to remember this isn't financial advice. This is purely entertainment and education. Now, if you take a look at the analyst rating here, you can see we have 10 analysts, and it's quite interesting. We have 5 strong buy and 5 hold, and they're all, I think, realistic, as it is. The max is 47% up from where we are today, and the average is 18% up. I really couldn't say what a price target should be for this stock, as I can't really wrap my head around what a good price should be when they don't really make any money, and just the whole political turmoil, especially revolving cars right now. So I think, to be honest, where it is right now, trading at around $10, I think is actually fine. But besides that, I can't really say. Now, I do find it interesting to see that they are actually estimating they're going to earn more money. So perhaps it is a winner long term, but this really isn't going to get you any more than maybe 20% in the next 5 years. I don't think so. Yeah, really not worth having in a portfolio. I wouldn't say. I wouldn't even, if I had this, I would sell it. If I were getting, if I were gonna get out evenly or at a small loss, I would get out simply because I think your money could work better elsewhere, rather than have this slow piece of shit working in the back of your portfolio. So yeah, that was my analysis on the Goodyear Tire Company. Now, if you did like this video, please don't forget to like and subscribe.